Hi everybody, Allison here with our options video this week. And in today's video, I am going to discuss a strategy that I think would be great potentially into Wednesday, if not maybe into Friday, on the indexes, right? And you might consider this across other symbols because a lot of things are taking similar action this week because it is a holiday week. So for those of you who don't know or who might be newer to trading, typically on holiday weeks, especially the Thanksgiving one, where our market holiday comes on a Thursday, it's not uncommon to see consolidation and overall chop. And given where we're at from a technical standpoint, where we're right above the 100, this is not uncommon to see consolidation and chop. And the reason why is because when the price tries to break above the 100 period simple after trending below it, unless it gets a really good move to the upside immediately off that break, it's not uncommon for it to kind of stall there and to try and build energy to either move higher or basically stall there and end up breaking back down. A great example of this was back here in August, where we consolidated for a little bit, built up that energy, then tried to push higher, basically ran into monthly resistance and then rolled back down. And then we even had it here where we attempted to break above the 100, chopped for a little bit there, ultimately stalled and then failed and then rolled back over. So given the fact that we're right by the 100 and we've already started to see signs of that consolidation, and given that it is a holiday week, both of those combined give us the clue that chop is more than likely. So one way to trade consolidation is to do something like an iron fly or an iron condor. And so the reason why I say to look at Wednesday's trading day is because every now and then on Friday, which is technically a half trading day, keep that in mind, the market does close early on Friday's trading. Sometimes that trading day can actually see a bit of volatility, and a great example of this comes from last year. So here, last year was the holiday week. You can see initially on that Monday we opened up a little bit, pulled back, and then we started to stall, and basically the rest of the open and closes for that Tuesday and Wednesday all hung out right around the 10 period simple, and for the most part we just chopped in that range. Then Thursday was a market holiday, and so the next bar that prints is Friday, and you can see the Friday we had a gap down, and then we had a pretty strong trending day. It was a 79-point range versus the more 40-point ranges that we saw back here. And certainly last year, a 79-point range was on the higher end of volatility. A lot of our ranges last year, were anywhere between, I'd say, 17 to 45-ish. And then when we started to get ranges above that, that's when the volatility started to, peek its head in a little bit more. So on the Friday, right, that volatility snuck in, even though it was a half day, and then it remained for into the next week. So that is why I mentioned that for this trade idea, Wednesday might be the better expiration to consider, just in case Friday is a more volatile Friday like it was last year. It could be that Friday also remains flat. That's the other side of the coin, is it really doesn't do much either and we just hang out still. But it's up to you to decide if you want to give yourself a little bit more time on the trade and therefore potentially risk seeing volatility on Friday, or if you want to keep it shorter dated to where that theta decay has a better probability of benefiting you and working out. That being said, as I mentioned, theta decay style trades are usually a better route to go going into the Thursday holiday. So when we take a look at SPX from an hourly perspective, we can see that this has been consolidating, right? We're actually building into a squeeze. Momentum's hugging the zero line. We have choppy signals on the compound breakout tool. Bollinger Bands are flat, right? The 10 and 30 are converged. And so we're seeing a lot of signs of consolidation. I would argue that within the last week, the top end of our range has been around 39.80. That's been a recent intraday price resistance level. Just slightly above that at 39.89 is the ATR trailing stop, which is also acting as a resistance. And then to the downside, 39.20 has been a price support level. We did see a little bit of a blip below that from an intraday perspective, but for the most part, that's been holding. And of course, when we take into consideration daily support, we have that at 39.29 with the 10 period simple currently and 39.1198 with the 100 respectively, right? So we have quite a strong support level here, and we have some resistance levels above us. Ultimately, for this week, at least going into Thursday, I don't really think we're going to break strongly above 4,000, and I really don't think we're going to break strongly below 3,900. I think this is likely the range that we'll chop in. So, given that, and given the more narrow range that we have started to confirm from a hourly perspective, I think a great trade to consider going into Wednesday's expiration is an iron fly using 39.50 as the pin and 39.80 and 39.20 as the wings. This is a 30-point iron fly. Currently right now, let me make sure this is in the right account. There we go. Currently right now, this is a 23.50 credit versus a 6.50 risk. So certainly not a bad risk versus reward as long as this is within your risk tolerance, and can make an excellent profit potential if all we do here is hang out. Now, I personally would probably not let this cash settle. I would look to close it out before Wednesday's close just to guarantee that profit and make sure we don't get one of those volatile moves into close like we've sometimes seen this year. But if all we do is chop and hang out like we have been, right? If all we do is hang out in this consolidated range, I think the premium that we're still seeing here is an excellent credit versus risk to see, and is one to take into consideration. If this is a little bit outside your risk tolerance, I get that, right? I like to keep my risks small too. Then instead of an iron fly, you may consider something like an iron condor, right? Instead of your wings being at 39.20, 39.80, you put those as your short strikes, right? So it still stays within that comfort zone. And currently that's about a 275 credit versus a 225 risk. So obviously it cuts way back on your profit potential, but it also narrows your risk. And this here would have the possibility of you just letting it cash settle for worthless because you have a much wider room for the SPX and underlying price to stay in between 39.20 and 39.80 to still allow for that max profit potential. So two different trade ideas to consider going into Wednesday of this week to really benefit from the theta decay and chop that we might see here. As always, guys, may the trade be with you. My fellow Jedis, be mindful of that risk, and I look forward to talking to y'all next time.